Hello traders and scalpers, welcome back again to the Stock Market Scalper channel. I'm your host, Scalper779, and in this video we're going to be looking at call options and put options. This is the SPY chart for Tuesday, January 23rd, 2024. And over here, the same chart, different color, but just for those guys out there and girls that don't know how to look up options, you're gonna have to go find your search, type in the instrument that you want to look for. So in this case it's spiders or SPY, and you go to the option and it brings it up. So these brings up the menu. So these numbers are the price levels and they're considered strikes, right? So I got 10 numbers showing here, I think. Yeah, I'm not going to bother counting them, but you can change it. You can put all of them. Let's put all of them. No, it's so many. Like it's a lot. It's too much. So anyway, we'll just keep it at 10, keep it simple. So what we're going to look for, here's the morning action, and it was down, right? And what's the price level we're talking about here? What's the range? 484-ish to down to 483. So let's look at both of them. Let's look at the 484 put. So we just click on there. We'll highlight the action for today. And what do we get? So each candle represents 15 minutes each, right? So what is this? 10 o'clock, 10:15. There we go. 10 o'clock, 10:15. So the low here was what? 71. So it's 0.71. But you multiply that by 100. So it's not 71 cents. It's actually $71. And you could have gotten here if you didn't want to scalp the actual ETF of the spiders. Then you could trade one of these things, buy one of these for 71 bucks, and ride it to, you know, the top was 136. Yeah, the high was 136. Now options do move a little bit more than an ETF, let's say, or a stock. Like it dropped, we got 119 all the way down to 89 pretty quickly, and then we're way back up. Anyway, it's not for everybody. I just want to show you the option side of stuff. So let's check out the put. So when you're buying a put, if the stock or ETF, whatever it is, goes down in price, you're going to be making money. A call is when the price goes up, and you'll be making money on your call. Okay, so you're using calls if you think the stock is going to go up, and you're using puts when you think the stock is going to go down. And these are considered naked calls and naked puts. If you're going to buy it and you don't own any shares, right, you're just trading the option, it's a naked put or naked call. FYI. All right, so let's look at the 483 put. Highlight today's action. A little bit cheaper. Here's the 10 o'clock, 10:15. And this is just our reference, right? We're looking at this area right here. So everything's the inverse. What's the low on this one? $41, $40. And it went up to its low 70s, 70 to 74. All right, it's not bad. I mean, if you're a shooter, if you're a player, buy 10 of these. That's 400 bucks. You don't double your money, but you sell them in 15 minutes. You make 300 bucks. Pretty easy. So that's the put side of things. But we're interested on the call. Look at, there's a nice move from. Excuse me. Well, it started at 11:30, but as you'll see in the option chart, price moves a little bit different. So what are we looking at here? We want so 483 is way down here in the considered in the money. We'll look at it after, but I think the magic number is 484 for this chart right here. So let's look at that one. And here we go. So the call option's losing value, right, all in the morning, because for a call to go up in price, the price has to go up, and this has been going down, right? So it's losing. Had a bit of a bump here. First bump, 12:30, 12:45. And that's right here. Okay. But the real move started at 2:30, and 2:30 is right here. So this is 45 minutes worth of action right here. What do we get here? The low is $24. $24 right here for one contract. And in 15 minutes, it went to a high of $105. Not bad. Not bad. You're basically quadrupling your money, right? If you got the high. It's hard picking the bottom, but look at this. You can do some technical analysis on this chart too. But I'll save that for another video. Just want to show you the price action here, right? So if you don't have $480 to buy one share of the spiders, I'm pretty sure you got $24, $25 to buy one call option on it. But a tricky thing is, if you don't have enough money, you won't be able to buy it this close to the expiration. Okay, because this call option actually expires at the end of today. It's already expired. So yeah, it's depending on your provider or whatever it's called, your trading platform. Some won't let you, if you don't have enough money to cover a margin call or whatever it's called, they won't let you trade in the afternoon. There's a time cutoff somewhere. Anyway, you'll find out pretty quick if you try it. Let's go back and just quickly look at, so if we want to buy the 483 call, there we go. Just click on that. It's going to be more expensive. So here we go, 12:30. $64, right? Yeah, $64, and in half an hour it went up to $1.19. So almost double your price, right? Almost double. And it came back down, and then here's 230. So what do we got? $80, all the way up to almost $2, and eventually went up to $2. So you could have more than doubled your money here. Anyway, you can spend the time looking at different things. I just want to point out kind of where the sweet spots are. But yeah, buying call options or put options can be very lucrative if you know exactly what you're doing. So hopefully this video has been informative. And if there's anything you want to find out, or pick my brain or whatever, send me a comment, send me an email. But like the video, subscribe, and I appreciate you watching. See you in the next video.